Hey VV Nation, glad for you to be here. My name is Glenn Tompkins, Senior Instructor here on our YouTube channel, and I've got a great video that's going to make you sit back and think a little bit, especially because of the Fed's decision coming tomorrow afternoon. The Fed decision and what to expect. And that's important because it's going to affect the stocks that are in your portfolios at this time. Whether you hold them, whether you don't, whether you just pivot, whatever you need to do, the Fed decision tomorrow could be a big decision. And it all starts off with, is the Fed disconnected or is the Fed real in regards to what's going on? So I'm going to lay out what's going on. I'm going to talk about some rumors that are going on out there as well. And I'm going to give you some good expectations to take advantage of. And I'm also going to prepare you for both sides of the market depending on what the Fed has to say. Looking at today, by the time you get this video later on this evening, the market looked like it was going to go gangbusters this morning and then fizzled at the open. Stock market news live update, stocks turn lower with the Fed policy and earnings in focus. So there's a couple of things right now that are driving the market higher with all of the negativity in it. Anticipation of earnings, and a lot of companies have beat earnings, but if you look through and see what's really going on, a lot of companies are looking at not so good forward guidance. But that makes sense with rising interest rates affecting the bottom line. Next thing, the Fed meeting to focus on interest rates coming path. Now, this is where the rumors start to come in. A lot of people are talking about, well, the Fed is going to step back a little bit and start slowing down. And I understand that rising interest rates are a lagging indicator and it takes time for it to take effect. But has the Fed done enough so far in regards to going after 40-year high inflation? So he did say in Jackson Hole that his monetary policy was going to cause the economy pain. Has it caused us enough pain yet? Or are we just falling back because we're getting a little hurt and we're going, oh my gosh, we can't take this anymore and the Fed's got to stop this? Well, if inflation is still at 8% and the interest rates right now are at 4% or anticipated to be at 4% with the next rate hike, are we where we need to be? Does he need to step back and see if the monetary policy is going to affect it and start to bring it and shrink the economy more? So now with that, the Fed is expected again to raise interest rates by 75 basis points and then lay the ground for a step down. This is coming from Yahoo Finance. This is coming from an individual giving their opinion in regards to it. Folks, I'm like me. I'm part of the show me state. Show me that that's what you want to do rather than thinking that the economy is where you feel that it's hurtful and that the Fed's got to step back. The Fed's already said that he's willing and that he's able to cause the economy some pain to go after inflation, which was, transitory. Remember that? Yeah, it was in transitory, but now I think that with the statement that he's made, I don't think he can back off by slowing down on interest rates just yet. But that's my opinion. Next thing, the Fed data sets the groundwork for the rest of 2020. What to know this week. I'm going to go down a little bit. Now, this says it feels like we're nearing the peak in inflation and such, getting closer to that elusive terminal rate, the achievement of which could bring some stability to the markets and allow the Fed to pause to assess the impact of its rapid rate hikes on inflation. And there's a lot of people who are in the same camp. He's been raising them too hard, too high, too fast. Let's step back and see. But wait a minute. Ultimately, we feel that the Fed rate will likely begin to reduce the size of increases and then pause to assess their cumulative effect. But we expect the narrative to remain, I can't highlight that, the narrative to remain higher for longer rather than entertaining any kind of pivot language. Two different sides of the fence. So as far as the Fed starting to help the economy shrink, how about the jobs opening surged in September despite the Fed's effort to cool the labor market? The Fed looks at this and the Fed is probably saying, we've still got to do the work to go after inflation and really shrink the economy. Even though it's a lagging indicator, he's got to put forth the best efforts right now to quell inflation, and he's got to do it. And from the program, I'm going to give you a little glimpse of what's going on in the market. This is using something called the VectorVest composite, which tracks the movement of about 9,000 stocks. Here's from the November high. Here's a downtrending market. We're above it. Here's from actually, that's the August high. Let's go back a year. There we go. Here's the folks, that's the trend of the market. Do you think that the bulls are trying to do everything and anything that they can to get out of this protracted downtrend? And I think it's a lot of euphoria. Well, you know, the Fed's going to stop and it's going to. But another side of that is all of these moves to the upside have been based on two industries, pretty much, and two industries only, and that's oil and energy. If you're going to be in a real, true uptrending market, it needs to be more inclusive than just two industries moving the market. Even with today's activity, we've got a closed green candle. And you know what I'm going to do? This coming Friday, I'm going to give you a more in-depth analysis of the VectorVest market timing so that we can show you that no matter what's going on in the market, how you can be on the right side of the market no matter what type of investor you are. So stay tuned for Friday's video. We're going to use this graph and we're going to go a little deeper into it. So now, with all of that being said, the Fed is fighting 40-year high interest rates. The rumors are that he's going to back off because the economy is feeling the effect. The Fed's got to show me something before I believe that. All of those stories telling you that he's going to back off are rumors, what they feel. The Fed, if he's going to stick to his guns, he's going to keep doing what he's going to do. And what is that going to mean for the market? It's going to mean that the market's going to continue to pull back because people don't want him to keep doing this, even though it's a necessary thing. All right, so how would I end up this video without giving you something to look forward to? So I've got 10 stocks for you. If the market, if the Fed decides that maybe he wants to pull back a little bit, I've got 5 stocks for you to keep your eyes on for the bullish side. Healthcare, energy, steel, and shipping. A little bit of diversity there in regards to what's going on in the market. But if the market doesn't like what he's saying, then I've got 5 contra ETFs I want you to pay attention to. The Qs, the high betas, the Russell 2000, the Dow, and on stocks dealing with the biotech industry. Folks, with that, all I'm telling you is the expectations. I don't care what everybody's expectations are. All I'm telling you is the Fed's going to do what he's going to do, and no one else, none of us are in his head to be able to know what he's going to do. But all I'm telling you is that he set the groundwork to do the work that he needs to do to go after inflation. And if he sticks to his guns, we're not going to like it. But he already said that he was willing to cause the economy pain. Folks, if you like this video, hit the like button. If you really like this video, I invite you to share this video with people in your social circles so that they get a better view of what's really going on and what to expect from the Fed. Folks, this video is over. And until the next time, see ya.